Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I started looking at my portfolio and see if I can find any of the companies that I own that are undervalued at the moment. Basically what I'm trying to do is find companies that are undervalued within the portfolio. That's what I'm trying to say. And also try to find other companies that are still basically undervalued on the market that potentially might be a good addition to my portfolio. Because what I've realized is recently is, and I've said this to you guys before, when it comes to technology companies, I actually do own quite a bit. So 25% of my portfolio is information technology. Industrials is about 24%, healthcare 14%, financials 10%, consumer staples 10%. Materials and consumer discretion is about 8 and 6%. The smallest one is real estate because I only own one company. Financials, although I own one company, but now I used to own one company, but now Visa is part of the financials, so it is now become a not technology company, a financial company, which is basically quite good in a sense. That's what it is, right? So I'm looking at this and I'm thinking, okay, consumer staples used to be almost closer to what technology is right now, but I've got rid of quite a few companies, and now I've decided to look at some of the companies in the consumer staples to see if I can actually find something that's good enough to add to the portfolio, or basically look at the existing ones. And I'm going to start with the existing ones, the ones that I have already. And there are 3 companies that I own in that section, and these are, so the first one is Procter & Gamble, then I've got RB, then I've also got Unilever. So today what I've decided is to look at Unilever. Unilever is one of the companies right now I haven't actually been buying a lot because, and I'm down, I think, let me just check. Yeah, about 1% down right now. So it's still basically where I've been buying in the last few months, and I've got 100 shares. So remember, I used to buy basically 1 share of Unilever every single week. And looking at their financials, it seems a little bit undervalued still. So I'm now thinking, should I be adding to it? Should I not? So let me just go over very quickly. I don't want to make the video long, so I'm going to be very quick. So in terms of the breakdown of their business, they've got the beauty and well-being, they've got personal care, they've got home care, nutrition, and ice cream. This is one of the companies that helped me to kind of diversify my portfolio. And the reason for that is because their products are not just sold in the United States or the UK or so on. It's global. Okay, so that's one way to play the basically globally in terms of, for example, emerging markets and so on. So I really like their business. I like the breakdown. If you look at it here, you can see basically in comparison to the first quarter of 2023 in comparison to the first quarter in 2022, everything was up apart from nutrition. Okay, the Q2 might be slightly different, so we'll see when that happens. But for now, the company, in terms of financials, it looks absolutely fine. And the fact that even when recessions happen, these companies do well. Generally they do well because they have a pricing power, which means basically they can increase the price of the product. And obviously, a lot of us are kind of used to buying their products, so you're just gonna go to Tesco or Asda, wherever you shop in the world, and just buy their products without even thinking about it. That could change if things things get worse from now on, obviously, because if the proper recession hits in all European countries and the US and so on, people will probably put more emphasis on buying things that's essentials rather than just basically beauty products. But let's quickly have a look at the financials of this company. So I'm going to go over very quickly some of the elements that I want to talk about today. And the first thing I want to talk about is basically the breakdown of their business, which is quite nice to see on Simply Wall Street. Okay, so nutrition, basically the recent year was about basically almost $14 billion and euros. The personal care was almost also $14 billion. Home care, 12.4. Beauty and well-being, 12.2. And ice cream was about $8 billion. So all of that added together, the revenue was about 60 billion, not dollars, 60 billion euros. Okay, the gross profit from that was 24 billion euros. The cost of the sales, okay, was 35. Let's call it 36, which is quite high. I'm not sure why that is too high. So the earnings from that was 7.64 billion euros, and expenses was about basically 16 billion euros. And when you break down the expenses, because remember the company has to pay the advertisement side of things, so general administration, the research and development, sales and marketing, non-operating, so on, and others. So this is their cost basically of, so they've earned about 7, and this is basically how much the company spent based on the basically gross profit. So looking at the current PEs, you can see it's about 15 right now. So the fair value is about 24. So if you look at based on PE, the company looks actually a little bit of basically undervalued. However, what they're saying is it's overvalued about 8% right now. So the price they expected the company to trade right now is about 37.8. So it's 37 pounds and 80 pence. Okay, instead of basically 40. And this is the times that I've been buying actually when it was 31, 32, all the way up, but I decided to buy more recently, and that actually put up my average all the way to about 40 something. I think it's about 41 or something like that. So if it trades back down again, that will be a very good time for me to actually add to it again. Looking at Seeking Alpha, Morningstar, you can see they're saying it's about 8% discounted right now. It's about 4 stars basically according to them. The company has, in terms of free cash flow, the company has about 5.5 billion. This is in US dollars, so they kind of trade basically reporting everything in US dollars. And according to Seeking Alpha, in terms of earnings growth, so this is the estimates for what they're expecting from the estimation side of things. So a year-on-year growth about 7% in terms of EPS, then 4%, let's call it 5%, then 10%, and so on. And the analysts that are looking at about 4 people, 3 people. So if you look at just the first 3, you can see 7% growth in the 2023. 4% growth, let's call it 5% in December of 2024, 2025 about 10%, which is decent for this company. Okay, and then when you look at the revenue side of things, so for the estimates, if you just focus on the first 3, whichever you prefer, you can see almost 5%, 3%, 5%. So it's decent for this type of company. You don't expect them to grow double digits every single year, so you get that, and you get the dividends. Overall you get about 7% and so on. And as you can see here, this is the kind of US version of the stock, but as you can see here, Unilever is actually, when it comes to dividend safety, is 75% safe, which is really good. The dividend yield right now is about 3.6%, which is nice. Okay, if you get 4% plus the 3, you're getting decent amount of money. And right now I should be getting, so I've got about $4,000 in there. Okay, and I've got 100 shares. So according to this anyway, annually I should be getting $190 basically from this company, which is quite good. The payout ratio is slightly high. Okay, but they have been increasing that dividend for 28 years, but they haven't consistently been increasing, and they haven't basically increased it a lot. So about 3% in the last 5 years. So they're not really dividend growth company per se, but they are dividend payer. Basically, they do pay dividends, but they're not the type of company that will increase every single year. Having said that, the Dividend Max, which is what I use for UK stocks, so it's called dividendmax.com. It's actually quite good, useful website. I'm not affiliated or anything like that. It's actually quite nice to find a UK based stocks, if you like. When you look at the annual dividends, it's actually been growing for the last few years, which is quite nice to see this graph, because Seeking what is it called, Simply Safe Dividend is actually obviously is American company, and they favor all the American companies. They don't have a lot of information on companies that are trading in the FTSE 100 and so on. So this is actually a good website to look at. Like if you're looking for Rio Tintos or RBs or any other company, just go on this and you will be able to find that information there. But just, yeah, so this is better picture when you look at when you're looking for the dividends. Okay. And a couple of more things in terms of shares outstanding. As you can see, it has been declining over the last few years, and total sales has been increasing. Obviously, it can't, basically the expected is right now is kind of, they're not gonna make a huge jump from where it is right now, so which is what we've already seen. So in terms of things like operated margins, which is like right now about 16%, free cash flow margin of 13%, the company seems healthy in terms of financial side of things. It seems basically depending on which company you look at. If you look at the valuations in a Simply Wall Street is obviously overvalued by about 8%, so which is not a lot, to be honest with you. The company has been trading down in the last few weeks, about between 40 and 41 and sometimes 39 and so on. 39 pounds, that is, okay. But if you look at Simply Wall Street, sorry, if you look at Morningstar, you can see it's a 4-star stock. But when you look at the ratings on Seeking Alpha, you can also see the analyst in Seeking Alpha is actually saying it's a hold. Wall Street is obviously saying a buy. Quant is actually saying it's a hold. Even if you look at the Wall Street predictions, by the way, this is the US based version of it, okay, there's not that many analysts looking at this company because this is not the type of company they want to, right? This is not one of those high flying companies, but this is the companies that I genuinely like to invest in. And the reason because it kind of gives my portfolio a balance, okay, and for me that's really important, because I don't want all high flying companies that could potentially, go down 20-30% every single day. I need the Unilevers to stabilize things, and I've only got about 4%, 5% of my portfolio here anyway, which is basically quite, in my opinion. So there you have it. That's the company that I wanted to talk about today. It's been really difficult recording this video because my internet is absolutely shocking. Like I said to you guys before, I'm still on holiday. So if you're enjoying this type of content, okay, and I'm going to try to keep doing this for majority of the companies that I own. The ones that are completely overvalued, I might not look at them, but the ones that I haven't spoken about for a while, I'm going to focus on those within the next few weeks, and I will definitely be basically doing more videos inshallah in the next few weeks. But yeah, if you enjoy this type of content, join us on the Patreon, don't join us on the Discord, okay? It's really important for us to kind of build this community and now it's growing, okay? The Patreon account is basically where you can support and help the channel. It doesn't cost a lot, and you got a lot of the spreadsheets and basically the ebook that I've posted there, so you get a lot of new things, and you can join us on the Discord. If you're on the Discord, okay, just basically participate, have a conversations with everyone, ask questions, okay? That's not for me to kind of post, it's for you guys to have a discussions and talk about some of the important things that you're going through right now. If there's companies that you want us to look at, let me know as well. I'm going to compile a list of companies some people have actually mentioned to me recently that we have never spoken about, and I will be doing videos on those as well. So if you're enjoying this type of content, okay, this type of transparency and everything else I'm doing here, please join us on the Discord. Help the channel by clicking the subscribe button, as well as like the videos. Have a wonderful day. Assalamu Alaikum.